Today we're going to talk about the biggest challenge for retail traders with stop hunting. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. In the last few videos we've talked about the market maker template, the general stop hunting tactics of the market maker, the different levels in terms of the template itself, and then trying to identify those levels on your charts. And today we're going to talk a bit more about the biggest challenges with stop hunting. So my main focus is the London Open, Asia Closed London Open, which is at 3 a.m. New York for me. Europe typically will open around 2 a.m. New York time. Right now, daylight savings in Perth, that's around 3 p.m. 4 p.m. the London market opens. And in that first 2 hours, every single day, there is usually a trade that takes place, and the move will be anywhere from 25 to 50 pips or more. Now sometimes, depending on how that setup is and the level of the template that we're in, those trades obviously can be great asymmetrical risk-reward opportunities. But the two biggest challenges that we face as retail traders are trying to sell a breakout candle or buy a breakout candle. And typically what we'll find, we talked about in the template, the W and the level 1, level 2, level 3 trades, and then again the M pattern, and then the level 1, level 2, level 3 trades. In the WVVM market template, which is the rising market, we'll often see a deep stop hunt to the downside, but often we may see a false break trap before we see the stop hunt low. And oftentimes these types of buy low, sell high setups are against everything in terms of what the retail traders will use for technical indicators. Now I've talked about identifying a 25 to 50 pip range in the Asia session. I like to see something that I can typically shape as a rectangle. As Europe is opening or into London, we'll often see three really strong candles, or a series of what could probably be measured as three big candles. It might be 4 candles, it might be 2, and then a break, and then 2 more, but it typically will show a strong momentum push outside of the box. Now sometimes they'll just go to the edge of the box, but what's really important is the time of day. So often we'll start to see that move either out of the box on either side at the Europe Open. And then we'll see the London candles either break out or reverse right away off of one of those extremes. Now, this is the hardest area for a retail trader to enter the market, because there's nothing that usually with technical indicators that would justify buying the low of that candle or somewhere in the low of this candle, or selling somewhere up in the high of this candle. And so what's important is, number one, identifying where you're at in this cycle. Obviously, if you're in level 1, as I mentioned before, in either the up market or the down market, this will typically be what's termed a straightaway trade, where the market will move very quickly and trap traders from the other side of that market. So if there's traders over here, the stop hunt may actually be to the top side, trapping traders long, and move very quickly down. And same thing with level 1 on the upside, where we may see the stop hunt drive down, taking traders into the market on that false break short trade, and then violently move quickly back up to the north side with strong candles, trapping all of those traders that entered into that swing short or swing long if you're in the down leg. And that market will typically move 25 to 50 pips very quickly, very quickly. So this is something that I worked on in terms of using micro lots when these candles printed at the London Open at the extremes. If it was 4 a.m., 4:15, usually the first or second candle, I would practice buying somewhere down here and putting a 15 pip stop in, or selling up here and putting a 15 pip stop in. Now, I'm not suggesting to just do that randomly. this has to tie in with the template that you're in terms of an up or a down market. But what you'll see is that when you buy low or you sell high, usually the market, even if it's still going to go in that direction, will usually give you a couple of candles to still get out at break even. But what's important is identifying the level of the rise or fall that you're in, knowing that if you're in a level 3, you might get choppy markets on both sides. If it's a level 1, you do not want to counter trend that market, as we saw last night in the pound crosses, the pound yen and the pound dollar. That was a level 1 on the pound yen, and it dropped well over 100 pips. It cleared out of the London box, and then as New York opened, dropped another 50 or 60 pips down. Does not give you a chance to get out, and sometimes will only give you 1 or 2 small chances to get in if you've missed that initial entry. But again, as we head into level 2 and level 3, on either side, we'll see some variation of this, and sometimes in level 3, as the market makers try to trap more traders into that final stage, they'll actually give you a trend trade, which is where you may actually have an entry long, which appears to be just a normal swing trade, getting more traders into the market easier in that final stage. They're willing to give that little bit up because they know they're going to reverse that and trap them up at the top. So try that drill yourself, trying to identify the low and the high of your session, and then practice where you would sell, where you would buy, where you would put your stop loss, and also looking to the left side from the previous day if there are any levels of highs and lows that are significant that these may be doing stop hunts on as well. But the better you get at understanding where you're at in this template and then being able to buy low or sell high, the more confidence you're going to have. That flies in the face entirely of what most technical indicators and systems deliver in terms of their entries and exits into the market. So hopefully you got some value from today's video, traders. Again, with any of that, apply your overall big picture analysis to whatever you're doing in that session. Always manage your downside. My stop goes into the market immediately, and again, I'm targeting 3, 4, 5 to 1 and sometimes 10 to 1 on those trade setups. But it's a great drill to practice the high-low drill to see if you can target the high and the low of that session and perhaps maybe even the day. So if you haven't done so, go to my homepage, get my 7-step daily routine for high-performance traders, get in the daily habits, accelerate your learning, setting goals, journaling your trades, building your mindset, your confidence, and discipline to master the markets. Also, thanks for the great feedback. I've had a ton of emails, so I'm sorry if I've been a bit slow with getting back. I'm just trying to get through each one at a time. And also, if you haven't done so, get the free M&W course, taking a look at the bigger picture of the 3- and 5-day market cycles that go on, and see if that helps improve your trading so that we can both keep getting better to master the markets. Have a great trading week, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.